Hello and welcome everyone. I have launched this series of videos on YouTube to help all aspirants of AAA examination for framing their answers. Because one area that everyone often has a problem with is how exactly are you supposed to frame the answers to certain questions. People know what to write, it's just that they don't know how to write it. So today's discussion, we are going to split it into two parts. Of course, we'll have one entire question on prospective financial information that I will discuss. This will be followed by general guidelines in terms of, if a question of this type is tested in the exam, what are some of the points that you should always include in these answers? Okay, so this is a past examination question, Moritz company. Whenever a question is presented to you, make it a point to read the requirement first. The first part is using the information contained in Exhibit 1, explain the matters to be considered by Moritz and Company before accepting the engagement to review and report on Lavenza Company's prospective financial information. Okay, so this is a question on matters to be considered before accepting the engagement, and this is for review of prospective financial information. Okay, this is not a regular audit. This is a review of prospective financial information. Second part, assuming Moritz company accepts the engagement, design the examination procedures which should be performed in respect of Lavenza company's cash flow forecast. This is for 7 marks. While there is no set rule given by ACCA, or for that matter, no examining body will ever give you a rule that for 10 marks write 10 points. But if you want to satisfy yourself in terms of, the bare minimum that an answer should contain, here try to write at least 7 to 8 points for a 7 marks answer, specifically when it comes to procedures. Now, if you write less points, but still if you convey the same level of information, you're not going to lose marks. It's just that you should, all students have this thought here, minimum how much should I write? So this is the answer to that question. And then using the information contained in Exhibit 2, comment on the ethical and professional issues arising as a result of Beaufort Company's planned listing and the services which it has requested from Moritz. Professional marks will be awarded for demonstration of skills in analysis and evaluation, professional skepticism and judgment, and commercial acumen. So basically, apart from communication, everything is getting tested. Now, let's start. Let's go through the information. Keep some points in mind. The first part that you have to answer is what is that piece of, so what are the matters to be considered before accepting the assignment? So keep your eyes open for that. It is 1st of July. You are a manager in Moritz and Company, a firm of chartered certified accountants, which offers a range of services to audit and non-audit clients. The following exhibits available below provide information relevant to the question. Exhibit 1, request to provide an assurance report on prospective financial information. Exhibit 2 is on Beaufort Company. This is a separate part. Let's not, put ourselves under too much pressure in one go. Let's divide and rule. Let's tackle the first part, which is Exhibit 1, matters to be considered and review procedures. Your firm has been asked to consider a potential engagement to review and provide an assurance report on prospective financial information, which is not an audit client. Now, this detail is important, that this is not an audit client of your firm. Moritz and Company has already conducted specific client identification procedures in line with money laundering regulations with satisfactory results. So they have already done the anti-money laundering check and nothing suspicious has come to their notice. Lavenza Company has approached your firm in order to obtain an independent assurance opinion on a cash flow forecast which is being prepared for its bankers. For who is the intended recipient? Prepared for its bankers in support of an application for an increase in the existing overdraft facility. The following cash flow forecast has been prepared by the finance director of Lavenza Company for the 12 months to 30th June 2006. 3 months to September 2005, December 2005, March 2006, June 2006. These are basically quarterly forecasts that they have given. Okay, you have information on inflows, total inflows, then outflows. It is expected the way, this information has been presented in front of you. I think you can observe that the outflows are greater than inflows, which is the most critical reason as to why you need an overdraft. Otherwise, you wouldn't have needed if your inflows were greater than outflows. The following information is also relevant. Lavenza Company is a retailer of academic textbooks, which it sells through its own network of bookshops and online through its website. Understanding the nature of the business is important. This one is a retailer of academic textbooks, which it sells through its own network of bookshops and online. The revenue from the website includes both cash sales and sales on credit to educational institutions. So there are cash sales and sales on credit. The company has provided historical analysis of its trade receivables, indicating that for sales made on credit, 10% pay in the month of sale, 62% after 30 days, 16% after 60 days, 8% after 90 days, and the remainder are irrecoverable debts. The company has an established presence in large cities with universities, but has seen a decline in its core operations in recent years, which has led to a decrease in revenue and a fall in liquidity. In order to reverse these trends, the company is planning to extend its operations by opening new shops in small cities with universities and large colleges. Lavenza Company's management is planning an online marketing campaign targeted at the university sector, which they believe will increase the market's share by approximately 3%. The company has an existing OD facility of 12 million with its bankers and has requested an increase in the facility to 17 million. So they want 5 million overdraft additional limit sanction. Let's not look at Exhibit 2 right now. Let's only focus on Exhibit 1. And there are two parts to the question. Part A is matters to be considered before accepting the assignment, and part B is about procedures. If you observe, this additional information has got more to do with the actual amount of overdraft that you want to receive and the proposal you have made for that, the projected information that you have prepared. Whereas the answer to matters to be considered, now you will end up realizing that it takes a slightly more I wouldn't say generic approach, but the points are more or less similar in these type of requirements. Okay, so matters to be considered before accepting the review engagement to review and provide an assurance on the cash flow forecast. ISAE 3400, you don't need to remember the name of the assurance standard, by the way, but we list it down, just to give it that formal shape. But you will not lose marks for not mentioning, neither will you get extra marks for mentioning the name of the assurance standard. Okay, so before accepting an assignment to review cash flow forecasts prepared as per the uh, to review cash flow forecasts prepared as a part of prospective financial information, the reviewer or the accountant, you can don't use the word auditor because you are not an auditor here. You should say the professional accountant must consider the following points as per the requirements mentioned under ISAE 3400, examination of prospective financial information. The examination of prospective financial information. Now I'm writing it to sound extra smart. Okay, as I'm repeating, you will not lose marks for not mentioning the name of the standard. Okay, so don't worry too much about it. Let's always start with client integrity and making a reference to ISQM 1, which is the standard on quality management. And you should also ensure that the basic ethical requirements are also complied with. So client integrity and quality of and quality considerations. Okay, a reference to ISQM 1 is helpful in such cases. ठीक है. So first of all, one of the basic points that you should keep in mind before accepting any assignment is to consider the integrity of Lavenza companies or the client's management before you give an acceptance decision. See, in this case, again, they have mentioned that this client is not your audit client, which means the firm had some other auditor naturally, and it did not go ahead with that auditor. The firm came to you for reviewing the prospective financial information. So, naturally, that question should pop up in your mind that if they already had an existing auditor, why did they not approach the auditor who anyway would have known more about the business, but instead they approached you? So that question should be there somewhere in your mind. And you should also evaluate the potential for management bias. Okay. Now, as per ISQM 1, you don't need to write the name, it's a long name of the quality management standard. The professional accountant must consider the integrity of the management of the client. In this case, Lavenza company, that is the name of the client, Lavenza company has not approached its existing auditor who would have been better placed in terms of understanding the client business, internal controls, and overall operations. Instead, Lavenza company approached us, and we are not the auditors of Lavenza. So why it has not approached its existing auditor, but it has approached us, and we are not the auditors. So the firm should consider reasons behind this move of the client. Okay. And then you should also evaluate the potential for management bias in preparation of cash flow forecast. Also, evaluate the potential for management bias in preparation of cash flow forecast, because the management of course would be interested in getting the overdraft facility renewed. So there is likely it is quite likely that management bias might seep in into the calculations, and it is your responsibility as the reviewer to check the potential for management bias. Okay. Then ethical matters. See, you are not the auditor of this particular client, so you will have to check independence, which must not have been considered previously. Necessary to ensure that there are no threats to objectivity, which might, prevent you from accepting the assignment. Moritz and Company, I'm going to call it M and Company in the future. Moritz and Company is not the auditor, so it is necessary that the management, sorry, so it is necessary that a separate evaluation of what? Of the firm's independence is done prior to accepting the assignment. Okay. Um, you will also have to see whether there are any threats to objectivity. Evaluate for any threats to objectivity which might impact your ability or which might impact the firm's ability to execute the assignment. You spoke of independence. Then again, you should consider why the auditors have not been appointed to evaluate the prospective financial information, because they would be better placed to uh, perform the review. Now, Moritz and company should consider whether use of a different firm apart from the auditor, does it or was it done with an intention that these people, since they are new, they would not be in a position to challenge the assumptions made by the management while preparing the forecast. So, and specifically when you are evaluating that, you should know that there is somebody else who already knows the client better than this reviewer. So that person should have gotten first preference, and that hasn't happened. Okay, which, so you have mentioned that particular part. No need to mention it all over again. And whenever you have been appointed to audit prospective financial information, you should check, of course, you should get permission from the client and contact the auditor for obtaining relevant information. If this permission is not given, the appointment should be declined. Whenever a See how I'm not using the word auditor and I'm using the word professional accountant. Whenever a professional accountant is appointed to review any information, he should seek permission from the client and contact the auditor. For what? Not for time pass, not for professional clearance. Should contact the auditor to obtain relevant information for the assignment. If such a permission is denied, the professional accountant should decline the assignment. So this is the first part, ethical matters and client integrity. Okay, then before commencing this particular assignment, you should see whether you have sufficient staff available who have the right set of skills and experience needed to perform this particular assignment. And you should also evaluate whether sufficient time has been given to you. Okay, so resources and skills. Moritz and company should evaluate whether they have sufficient staff available, with the necessary skill sets and experience for performing the assignment. Okay, then it should also see whether it will be able to meet the deadline given by the client. It should also evaluate whether it will be able to execute the assignment within the timelines expected by the client, and these should be established before accepting the assignment. Okay, so you spoke about resources and skills. Then you should see the scope of work. What exactly are you expected to perform in this particular engagement? What is the level of assurance sought by the client and the form of report required by the bank? Okay, scope of work. Moritz and company should evaluate, or evaluate might be the wrong word. Moritz and company should consider the following aspects. of the assignment before conveying the acceptance. Okay, so let's make a list of all the points in terms of scope of work. Okay, basically, specific terms of the engagement, then level of assurance sought by the client and the form of report required by the bank, level of assurance sought by the client. Okay, then form of report, form of report expected by the bank. Okay, then what are the specific items that the company has been asked to report on? Specific items that the reviewer is expected to report on. Okay, then you should also evaluate whether you only have to comment on cash flows or you are also supposed to comment on any accompanying narrative, you know, disclosures or information that has been provided. So, is the professional accountant expected to comment only on cash flows or any other accompanying information? Okay. Um, that's pretty much it. Okay. Now, ये हो गया. See, now you're going in a sequential manner. First of all, you evaluated client integrity and quality considerations, ethical matters, resources and skills, scope of work. I did not specifically comment on money laundering because they have mentioned that the anti-money laundering check has happened and the results have been satisfactory. So no need to mention that. Otherwise, I would have spoken about that as well. Then the next part is period covered by the cash flow forecast and the key assumptions used. Period covered by the forecast and assumptions used. Okay, so it should consider the period for 6 months, 3 months, whatever it is. Short-term forecasts are easier to verify and provide assurance on as compared to longer forecast. Okay, now Moritz and Company should consider the period covered by the cash flow forecast. Covered by the cash flow forecast and the key assumptions used. Short-term forecasts are easier to verify and express an opinion on. Okay. And ideally, when the assumptions used are clearly very, very unrealistic or uh, the professional accountant feels that, this information is not going to be used appropriately, uh, it should ideally not accept that particular assignment. Okay. So also, if the assumptions used in preparation of forecasts are unrealistic, the professional accountant should decline the assignment. Okay. This is only for 6 to 7 marks, so don't go overboard. Then understanding what is the intended use of the information. That is again an important point. Intended use of information. Moritz and company should assess whether the report will only be used for the purpose of availing the overdraft, or whether the report is going to be used for any other purpose as well. Okay. Whether the report is going to be used for any other purpose as well. And if so, the same must be notified to Moritz and company. And whether the information will be for general or limited distribution. Whether the information will be for general or limited distribution. Again, this is one of the often repeated points. So, writing down all of these basically gives you a complete 360-degree view on points that have to be considered before accepting an assignment to review prospective financial information. I think these questions are pretty straightforward. We did one question before this as well, where you had the same set of issues, the same set of points, and nothing really changed in any of these answers. So, again, that I think can make your life easier because the answer is pretty much standardized and there is nothing new that you can expect. Now comes the more interesting part, which is basically assuming Moritz and company accepts the assignment, design the examination procedures which should be performed in respect of Lavenza company's cash flow forecast. Now, this is where, all your creativity can come into play, but ensure that you don't go overboard. Okay, your answer has to remain in line with the data given in the question. And whenever you are doing, whenever you are writing down the examination procedures on a cash flow forecast, the first thing you should write down is the casting wala point. Cast the cash flow forecast to confirm the mathematical accuracy. Basically, casting is totaling, what we in Indian terms call totaling. Check the totals first of all to confirm the arithmetical accuracy. That should always be the starting point. Procedures to be performed in respect of prospective financial information. Again, the first point, in my opinion, is a standard point. Cast the cash flow forecast, basically do the totaling, arithmetical accuracy. Cast the cash flow forecast to confirm the arithmetical accuracy of prospective financial information. Now, this prospective financial information, in this case, you have a cash flow forecast. You should check whether the accounting policies used in the preparation of the cash flow forecast are consistent with the ones that are used in the last audited financial statements. Okay, so confirm whether the accounting policies used in the preparation of cash flow forecast are consistent with the accounting policies employed in the last audited financial statements. General point. You can use that in all questions that are going to follow in prospective financial information. Then, if you observe, see, this is a question on cash flow forecast, and 3 months to 30th September 2005. Today is 1st of July 2005, and you have an opening cash balance of 9193 whatever. So you should agree the opening cash position to the ledger and the bank statement, right? Agree the opening cash balance to the ledger and bank statement. See, the words that you use are also important. whenever you are checking the balance and cross verifying that, you should use the word agree the opening cash balance to the ledger and bank statement. You see, this is the opening balance, which is a confirmed number. All of these are forecasts, by the way, but you started the quarter with 9193, so this number can be verified. So here you will agree with the bank statement and the ledger, and now you can go into items one by one. Okay, now let's see what is given here. What I would suggest you to do is, in such case, na, calculate the quarter on quarter growth rate. Okay. Sorry, my bad. What I'm doing is I'm calculating the growth rate. 7.98, 8.02, 4.42. Matlab, these all seem to be growing at a constant rate. Okay. Now you will have to evaluate the reasonableness of assumptions here. Okay, don't use the word correctness, use the word reasonableness of assumptions. Uh, while this is a quarter on quarter growth, see what is the year on year growth that you can observe here. The year on year growth would be, you are comparing this number with 434. So you already have a quarter on quarter growth of sales. Cash sales have grown by a certain percentage, and you will have to see ki what is the growth in sales and what is the growth in cash collection. Okay, so that point also you will have to evaluate. Discuss the, or rather, discuss with management the key assumptions that have been made while preparing the forecast. And then you will have to check the reasonableness or analyze the reasonableness of assumptions with the so check whether, don't use the word correct, you should use the word whether the assumptions are reasonable, because it's an assumption. You will never know whether it is right or not, or whether it is correct or not, till you have actually crossed that particular bridge and arrived at the end of the period. So check the reasonableness of assumptions used by the management in preparation of cash flow forecast. So you have seen, they have shown that cash sales in high street shops have grown by a certain percentage. Receipts from online sales have grown by a certain percentage. So what are the assumptions? Assumptions regarding quarter on quarter growth of sales and cost. Check that. Then check whether these assumptions are consistent with your knowledge of that particular industry and your knowledge of the client. Check whether these assumptions are consistent with Moritz and Company's understanding of the client and of the industry in which the client operates. For example, right now you could see a lot of growth in all these AI based companies. So you should, if somebody is giving a projection that the business is growing by 50% each quarter, that might be a reasonable assumption. But if you're talking about the automobile sector, that might not grow with the same percentage. So it is necessary for this reason that you understand the industry in which the client operates and how You understand the industry and you understand the client. Both of these are necessary. Now, when it comes to cash flows, you will have to compare. Acha, one often repeated point is you should see the past forecast made versus the actual results achieved, and that could give you a sneak peek into how those numbers are also going to play out in the future. Okay, then predicted collection of receivables, you should match that with the receivables ledger, or match the collection from debtors with the balances in receivable ledgers. Check the earlier forecasts made by the management versus actual results achieved for that particular period, noting down the variances in the forecast versus actual results. This would provide guidance, or this would provide an idea on whether the forecasts made can be achieved or not. Okay, then recalculate the pattern of cash flow. So whatever numbers have been given by the management, just perform a recalculation of the cash flow patterns and see whether the numbers have been correctly calculated. Based on projections of cash flow patterns, evaluate whether the company has considered these while preparing the prospective financial information and recalculate the data, or recalculate the figures, just to check, just as a re-performing that particular procedure all over again. Another point that you should say is that perform sensitivity analysis, but I'll come to that in a minute. Now, see what other items are given here. Okay. Here you can see salaries 72547109. So agree the salary payments with the latest payroll records, and check, whether the same number of employees have been considered while predicting or while projecting the future cash flows. Okay, so agree the latest salary figures with the payroll records and check whether future hiring plans have been taken into consideration while preparing a forecast of salary. Okay, then some you have overheads. Now, overheads are, it's not one item, right? Overheads will contain a lot of other individual expenses. So you should obtain a breakdown of the forecast overhead payments, compare it with the historical records and current budgets, and see whether, these have been prepared in line with how overheads have behaved in the past. So wherever you have one item which can be broken down into multiple items, that automatically becomes one of your review steps. So obtain a breakdown of the uh, overhead overhead expenses, and check whether this breakdown does not contain any